It is April 11th, 2020, and the Federal Reserve has done something remarkable, and you need to know about it. Hi, I'm John McNeil. This is the Invest Strong Network. Welcome. The Federal Reserve has been trying to staunch the flow of blood coming from the economic crisis that's been caused by the medical crisis that the world, and especially the United States of America, has faced over the last 2 months, right? Now, this week, it's taken some really extraordinary steps that kind of flew under the radar because, everyone else has been so focused on the medical crisis. So the way the Fed operates can be a bit opaque and difficult to understand for the lay person. So in this video, what I want to do is to really try to distill down to an easy to understand explanation of what the Fed is doing and how this will affect the normal investor, myself, yourself, others, right? Okay, so if you're like me, you've probably received letters and postcards from the "we buy ugly houses" people, right? So it could very well be that you own a property and maybe you want to move, right? Or perhaps you were even bequeathed the property in a will or something like that. But man, this place has a roof that leaks, or it has a big crack in the foundation, or maybe even has asbestos in the attic, or electrical wiring that is way obsolete, right? And you don't want to put any more money into this thing, but then you can't sell it either because it's crap, right? Well, into that void walks the "we buy ugly houses" people, right? They will give you a baseline price, purchase your property with cash, give you some money, and then you can wash your hands clean of this eyesore that you really didn't want to fool with in the first place, right? Well, you take that and then you supersize it in the form of the Federal Reserve, right? Now, in this instance, though, not only does the Federal Reserve want to buy ugly houses in the form of these mortgage securities that are going bad faster than milk held at room temperature, but now they'll buy all of your crap assets, right? Now, if you are an investment bank or a mutual fund house or an ETF maker, man, this is just what you've been waiting for, right? Because on your balance sheet, right, in your portfolio, you're holding a bunch of assets that 2 months ago were great, but now are just crap, and they're getting worse every day, right? So the Federal Reserve, Papa Fed, they're saying, hey, don't you worry about it. We'll buy those assets, take them right off your hands, give you some cash. Everybody's happy, right? No, everyone's not happy. And let me tell you why. First of all, the Federal Reserve is having to print a monster load of money in order to do this, right? Because this thing could add up into the multiple trillions of dollars, this program, by the time it's over, right? And at some point, has not happened yet, but surely some point in the future, that printing of money will become inflationary, right? And so there's that. But as it relates to the regular investor, myself, yourself, we have to really, really be careful because what the Fed has done here is really artificially inflating the value of all these asset classes, especially the real estate market, right? So it may very well be that you have, cash on hand and you want to go and maybe invest in some properties that are dropping in value fast, right? But if you go and purchase the properties now, you will be buying into a market that is being artificially inflated by the Fed's program, right? And so you'll end up paying more than the property is really worth. And then there's always the risk that the Federal Reserve could end this program, basically withdraw its support, and the real estate market could collapse entirely and wipe out your investment. Yes, that's entirely possible, right? So one needs to be careful with that. But also, as it relates to corporate bonds and even stocks, those markets are also being artificially inflated because now these ETF makers and mutual fund houses and investment banks and they can now get rid of a lot of the trash assets that they really don't want anymore, and they basically are dumping it on the Federal Reserve. The Federal Reserve is buying them, holding them, right, preventing the price from dropping down and thus artificially inflating the market, right? Now, as it relates to the stock market, stocks have rallied markedly in the last 2 weeks, right? Since its lows in the early 20s of March, right? Is this rally real? I get the feeling it's not real because of all the stuff the Fed is doing, right? Now, don't get me wrong. I appreciate what the Federal Reserve is trying to do. They're trying to keep these institutions liquid, and that way the economy can recover in a in a normal manner. And once the economy does recover, they'll begin to unwind these purchases, and maybe once the economy returns to a proper level, then everything will be okay, right? But boy, that's a mighty big risk, because it's just as likely that this crisis could drag on way longer than anyone expected, right? Which means the Fed will either have to continue to print money like crazy, or they will have to withdraw this program and watch these markets collapse. Either way, it's going to be crushing for the average investor. So what should you do? Well, obviously, I'm not your financial planner, so you would have to speak with them and, forge a path going forward. But I'll tell you what I'm doing. First of all, I'm not purchasing any real estate of any kind until this crisis blows over, right? That's number one. And a similar thing with corporate bonds. No way, no how, no more corporate bonds purchases until this crisis is over. Now, as it relates to stocks, I am dabbling in the market, as I've mentioned in previous videos, but I'm only acquiring the highest quality stocks, and these are companies that will survive and thrive either in this current medical crisis or when the crisis has ended, right? So these are strong, high quality assets. Those are the only things I will fool with, right? I am not buying speculative shares, nor am I buying any of the financials, the standard traditional financials, banks and things like that. Specialty financials, like I did in a video last week, those I'm dabbling in, but the others, no way, right? Not until this situation ends and the Federal Reserve can return the markets to a normal footing. All right, so these are things that you should be familiar with and cognizant of. So if you found this information informative, please smash the like button. I appreciate it. And please leave a comment. Always appreciate that. Thank you very much, and good luck.